Hello, World Economic News. It's the weekend. Let's start with the Doug Short chart. Now, these are the Treasury yields, United States Treasuries, since they announced QE2. So he zeroed them when QE2 was announced, and that's how they've gone. Up 200%, up 150%, depending on which ones you look at. The 3-year is the one that's up most. You can see those across the top. Blue for the 3-year, etc. Interesting to have a look, because the announcement obviously was that interest rates would be held low. Didn't quite work, but some things have happened. Who will buy treasuries when the Fed doesn't? This is all over the interwebs. It's PIMCO stuff, Bill Gross. And you can see on this chart who bought the treasuries. And in the old days, 50% went to foreigners. 40% went to the United States people. And the Fed bought about 10%. Who's buying now? 30% only those dirty foreign people are buying. But 70% is being bought up by the Federal Reserve Bank. Who will buy? Asks Bill Gross of PIMCO. The foreigners will stick to their 30%, but who will buy the Fed's share? And this is to scare the world and make PIMCO money. Answering the question, Cullen Roche at Pragmatic Capitalism writes, among other things, this paragraph. If one was to actually review the bond auction data, you can see this for yourself, link, where will the buyers come from? This is where the buyers will come from. They will come from the same place they've always come from. Although he acknowledges, that's PIMCO, he acknowledges that some of these buyers are foreign governments, he appears oblivious to the simple reality of the current account deficit. Those dollars may leave our shores, but they come back in the form of United States Treasury purchases. The alternative is for those foreign nations to purchase other dollar-denominated goods. And if you recall, most foreign governments have a pretty poor record of buying our resources, ports and oil companies, etc., because the American government stops them. So what do? They buy the safest yielding paper on the planet, United States Treasuries. If China wants to accept these these pieces of paper with old dead white men on them and let them sit in their vaults, then so be it. It is their lost income. We couldn't really care less. We will keep sending them pieces of paper, and we will keep receiving real goods and services in exchange. And Cullen talks more about the buying of treasuries and the system of how it really does happen. Link below. This is SocGen, Société Générale chart. This is global consumption at the moment. And the grey people are advanced nations, the Europeans and the Americans, and in very dark grey is Japan. And the red people are these emerging market foreign people, Brazil, India, China and other emerging markets. That's how it breaks down at the moment. This chart, looking similar but not the same, is who of these are growing their consumption. And this is the percentages of growth in consumption. And you can see that the grey, including the dark grey Japanese, is a lot smaller than it is in the actual consumption. So we are consuming a lot in the West at the moment, including Japan in the West, but we are not growing our growth. The growth in consumption is coming from those red foreign emerging market types, Brazil, India, China and the other emerging markets. This is Business Recorder, Pakistan's premier financial daily, that tells us that South Korea inflation spike strengthens rate rise case. Seoul, South Korea's annual consumer inflation in February rose more than expected to a 27-month peak, staying above the central bank's target and hardening expectations from economists for another rate rise next week. The emerging markets are being flooded with money, and it is rising the prices of things in those countries, and they are struggling to do something about it. India is trying to do something about its trade. It's linking with Asian nations, those Eastern people that made themselves a trading bloc. India have plugged themselves into it. Comprehensive economic pact with ASEAN by year end. We are in an advanced stage of concluding negotiations for free trade agreement in services and investments. So it's going to be a bloc of India, Asian, ASEAN nations, which I think Australia and New Zealand are in, or they are peripheral members of, and China, as one bloc, Euro bloc and American bloc. But is it all too late? Irish Times European document backs pact. So Irish Times gives us the document, second paragraph down, the document written by aides of European Commission President José Manuel Barroso and European Council President Herman van Rompuy sets the scene for talks of leaders on Eurozone Competitiveness Pact on March the 11th in Brussels. This is the big, we're going to sort it all out. And this paper written by the aides of Barroso and Van Rompuy is shocking. I thought they were quite socialist types, these European Brussels types. This whole thing, I think they've realised that with the Indian, Asian, China bloc and that they've got to go up against in competitiveness, they've realised that Europe is shockingly uncompetitive. And it's basically a complete union-busting austerity paper. I mean, it really is going to be very, very hard on anybody but the hyper-rich. I mean, it is really ball-busting stuff. It's only presented to be talked about, but it is a shocking document. And I've read... the worst example of it was on the website The Irish Economy, and commenter after commenter was coming on saying how reasonable and rational it all seemed. And basically they're accepting that, yes, it looks like that we've got to cut everything back till we can compete with the East. Good bloody luck on that one. CNN Fortune, Young Greek and Unemployed is this article. Rather sad. Snip from it comes as the situation for many under the age of 35 in this country of 11 million is close to desperate. Unemployment for those between the ages of 15 and 24 rang in at an alarming 35.6% in Greece. Next article is Spanish joblessness claims up 68,000 in February. Madrid, Spain says the number of people filing for unemployment benefits rose last month to a record, and their overall unemployment's over 20%. So what the European Commission want to do is put them all to work for the equivalent of a bowl of rice, what it'll be, half a plate of pasta. Debts can't be paid on half a bowl of pasta. Anyway, Economy Watch. $400 billion for global arms dealers in 2009. Despite the continuing global economic recession in 2009, the total arms sales of the 100 world's largest arms-producing companies increased by $15 billion, up from 2008. With the exclusion of China vendors, the top 100 arms dealers sold just over $400 billion of weapons in 2009, with the US leading the way, 8% up from the previous year and more than double its revenue in 2001. It's booming business. Of the 100 companies, 45 are based in the United States. Let's finish with this one from Energy Bulletin, I think. 3,000 billion tons of coal found off Norway's coastline. In 50 years from now, oil-producing rigs could be setting coal on fire far below the sea rather than pumping oil. Burning coal where it is one way Norwegian oil company Statoil thinks that the vast coal reserves on the Norwegian shelf can be utilised. This summer, students from Norwegian University of Science and Technology analysed data from 600 wells drilled on the Norwegian shelf of the North Sea. They calculated that there are 3,000 billion tons of coal off the Norwegian coast. Most of the reserves are located at the Haltenbanken. This compares to today's proven and recoverable world reserves of 900 billion tons of coal. Known reserves now at 900 billion, and they think they've just found 3,000 billion tons of coal. That's it for the weekend. Enjoy. Bye.